All right, and we are live. What's up, Marvin? How's it going?
Yeah, I'm doing great. Yes, happy to join this first episode. So yeah, thank you, David. How you doing?
I'm doing good. And welcome to everyone to the number one crypto podcast in the entire world. Yes, I know this is our first episode, but we're kickstarting it here and excited to have Marvin on board. So, Marvin, why don't you tell us a little bit about what you're working on, and tell us a little bit about yourself.
Yes, so I'm Marvin. I'm the CEO and co-founder of Maestro. So for people that don't know Maestro is kind of like this all-in-one infrastructure platform for people building businesses on blockchain and more specifically on Bitcoin. So we work with a lot of founders and entrepreneurs, and we abstract away complex blockchain infrastructure so that people can build beautiful applications that onboard the next million users. And so we get to work with some of the best teams in the space and really see them go from zero to one and really scale the application and really be a core part in like powering some of these really exciting new applications.
So, maybe let's just start from the beginning, which is why crypto? So many people frankly don't understand like what this blockchain thing is. They know about Bitcoin. They maybe heard about Ethereum and that you can build applications on it. But why did you jump into crypto, and why do you think this is a real technology that's interesting?
Yeah, I mean that's like a multivariate question. There's a lot of good reasons that blockchain can really transform our economy, transform our politics, transform our money, right? In many ways. And I think a lot of people know the money aspect to crypto and this contribution. But what brought me into it, it's more like the technological side and building a better technological stack for finance, essentially. So, finance is a big part of our economy, world finance, business, e-commerce. Um, and, the last 20 years, we've seen this explosion of tech, right? Everything's going online, everything's being digitized, and you're seeing the immersion of these huge tech companies. And the early days of the internet, it was very cyberpunk. It was very open source and about like building this bottom up software and these bottom up applications. I mean, websites and browsing Google and a lot of it was like very bottom up. And now, fast forward 20 years, a lot of these tech companies are highly centralized and centralized because they're very successful. They became almost too successful, right? With social media, with centralized across, a few companies with Facebook and Twitter. E-commerce is focused on Amazon, right, and Shopify, and you name it, right, like Uber and Netflix. And these are incredible companies that solve really cool problems and have brought a lot of value and people online, but they've also centralized a lot of the gains and centralized a lot of the data, right, that is being monetized on our behalf. And so for me, the vision is like, is there a new version of doing commerce on the internet that is more fair and more inclusive? And I think that's, to me, is what is exciting about blockchain is the fairness and the inclusivity of building financial rails and commerce online in the digital world in a digital native way, where the wealth and the value is not concentrated in middlemen that really take a lot of the value, right? And we can go more in depth. What does that mean? But essentially, creating a Spotify where the money trickles down more to the artist in a more fair way, right? Creating a social media where we're not at the mercy of advertisers and we're being farmed for our data. So that's what brought me in. It's it's harder to solve than I initially thought, right? I don't think we're that much closer to solving it, but that's one of the promises I think is really exciting for blockchains to at least take a crack at it, and hope to offer an alternative that just works better for more people.
So, why do you think the internet has? I feel like the internet started decentralized, right, to a degree, where it was uh, servers that you had to connect to, all distributed across the world, and then it sort of seems like it became a bit more centralized over time. Now we're sort of trying to shift back into this decentralized world with crypto. Why do you think the internet conformed to a centralized system? And do you think crypto stands a good chance to sort of break apart this monopoly that a lot of these giants have on the internet? And I guess one other thing is like Chris Dixon. One of the things that he says that he's concerned about is with AI, there might just be a complete uh, absorption of all internet traffic, right? If you just have these giants that are able to feed you information immediately, there might only be 4 websites in the world that you have to actually go to. So, what do you think about that? And do you think crypto can sort of disrupt that, or are other business models going to emerge?
Yeah, no, that's a tough question, to be honest. So I wouldn't say I'm a decentralized maxi, right? Centralization sometimes is a bad word, but it has its value, and that's why the internet centralized, right? So another way to say centralized is network effects, right? And when you achieve network effects, you achieve efficiency. And so often centralization happens because there is efficiency gains from consolidating, right, around certain protocols or certain websites or certain data sources, right? I mean, social media is just a great example. Is if you want to keep up with all your friends, right, and you want to be able to message them across a decade, like you're gonna naturally converge towards social media that where all your friends are there, right? You don't want to be fragmented across multiple communities. So there is value in some level of centralization. And so I'm not saying everything should be decentralized. And that's what happened to the internet is they just needed efficiency. And it made more sense to kind of like consolidate these players. What I want to be wary of is losing power as a consumer, using power as individual. And that's sometimes the trade-off of centralization is we actually lose power over our data, we lose power over our privacy, we also lose power over our money, right? And how it's moved around and how it can be censored and preventing us from interacting with other people. So that's why I draw the line is let's build technologies that yes are efficient, and if that means a bit of centralization, that's okay, but not at the expense of individual freedom, individual power, right? We want to be empowered bottom up. And I think that's where blockchain can help bring back some of that agency, right, to the user. It doesn't mean we have to decentralize everything, but just decentralize the pieces that give us that agency. And so I would say the same thing with AI, right? So I'm not sure exactly how that's going to pan out, but I think AI can bring a lot of automation and a lot of efficiency in payments and interactions between people. But we need to find a paradigm where we're still in the driver's seat and we still get to be the decision maker. And it's not like you said, an internet of just agents talking to agents, and then we're kind of not even in the picture.
All right, we're so back. Had some technical difficulties there, and now I'm definitely convinced I need to get a Starlink. No more bad internet at home. I feel like 2025 we should have good internet. And can crypto fix this, Marvin? Is crypto good for the internet?
Yeah, we should have good internet and we should have good payments. I mean,
Hmm.
I also still I'm frustrated how paying people internationally is so bad, expensive, slow. Maestro, we have people across multiple continents, and if we had to pay them through like regular rails, it would be a nightmare, right? And a lot of these standards, like cross-border payments, they predate the internet. They're actually based on like phone line standards. So I think it's about time that we upgrade our financial payment system, right, to the 2025. So that's coming. I think with the latest legislations on stable coins, we're gonna see like a large scale revamp of payments, obviously in the US, but I think also like across the world.
Yeah, so I actually want to hear your thoughts about the Stable Act and the legislation. So one thing that I've heard is something that was included in this legislation is stablecoin issuers aren't allowed to give interest to consumers if they're holding stablecoins. So for example, they can't offer treasury yields 4% if you're just holding a stablecoin, even though those stablecoins are buying treasuries, the dollars you're lending are buying treasuries and generating yield. And this was actually from the small banks because banks were concerned that they wouldn't be able to compete with these stablecoin issuers because they offer yield in a savings account. So what do you think about sort of that part of the legislation with the Stablecoin Act?
Yeah, so I mean, I haven't really double checked if all the details, but let's assume that this is like the case. Um, I mean, I was hoping, right, and I think a lot of people were hoping that you could earn yield by holding stables. And if you know how these stablecoin issuers work, like Circle, you realize that they make a lot of money doing a whole lot of nothing, right? They're buying treasuries and they're getting this. It's called risk-free rate for a reason, right? Because it's
Mhm.
risk-free. It's a return you're getting from a government that prints their own money. So it's the best possible return investment you can get. It's stable, it's reliable, and it's just because they are able to mint a stable coin for every dollar that is being deposited. So in terms of business, it's a great business. It's very cost efficient, and it has very reliable yield. And you know uh, with Circle, having hundreds of billions in minted stable coins, right? You can do the math. Like 4 or 5% on that is absolutely massive. Um, so I can see how like Circles and probably other issuers probably lobby to, or at least encourage to do that because they do want to keep the yield for themselves. Um, I think the consequence of that is that it's going to be really hard for other stablecoin issuers to even compete,
Mhm.
right? Because now, what is your differentiator? The only differentiator is the depth of your liquidity. And so, the hope for small stablecoin issuers is that, okay, we don't have the amount of liquidity that Circle or Tether has, but at least we can compete by providing yield straight to customers, uh, and then be able to gain market share that way. So it looks like that stable coins are probably going to centralize towards two, maybe three main stablecoin issuers that's going to capture all the markets, and they're just going to become the leader, and that's how it's going to be. And so I think when we decided the call with like how to empower the small guys, I think that maybe goes a little bit against that, unfortunately. But I mean, I'm still happy that we have stable coins, and I'm still happy that we're going to have good regulations around stable coins. It's going to unlock a lot of value. And it doesn't mean that we'll never get the yield. We may get the yield through third parties, right? So if you hold your stable maybe in Coinbase, or you hold your stable through
Mm.
some kind of custodian, then there may be some kind of yield sharing scheme that they will propose, um, which is not ideal, again, because now you depend on this kind of middleman to give you that yield, and obviously it's going to be less than what Circle gets, but it doesn't mean that no one will ever have yield. It will just go through kind of some central party.
So in the Genius Act, it now seems like banks are also going to participate in issuing stable tokens. So it's not necessarily just Circle and Tether anymore. Now we're actually going to have TradFi using crypto rails. Additionally, Tether is supposed to incorporate in the U.S. So they're going to have their holdings in the U.S. It's going to be like a legit U.S. entity, and there's going to be a lot more scrutiny behind their actual holdings. So there'll be like a paper trail audit of the $150 billion or whatever it is that Tether currently holds. I'm curious what you think about having like traditional finance coming into crypto, the banks issuing stable tokens. What do you think that does for cryptocurrency and for the industry at large?
Yeah, so I'm not too sure exactly how that's going to pan out, and what, for example, Bank of America have in mind when they issue a token, a stable coin. Is it for internal operations? And there could be like a reason of like it brings more efficiency and reduce operational costs internally. I mean, these banks are doing billions, hundreds of billions of transaction volume internally, right, between all their services and all their clients, and they've got to pay fees to all these intermediaries, right, to move money around. And so if they have their own stables and they control their own rails, then even for their internal operation, they could maybe save 2, 3, 4% of on fees on just transaction volume, which is also a big increase in efficiency. But maybe what they have in mind is actually more even like a consumer facing side of things, where then they're pushing towards us users and account holders, right, to save in these stables and maybe convert our fiat to these stables and earn extra rewards, right, extra yield. So I'm not sure. I'm really excited to see what they come up with. What it means for the space, for sure, it will help with normalizing what stable coins are. I mean, still this day, I go in the street and I say, what is a stable coin? Most people don't know what it is, right? So I think we're going to get to a place where now very soon everyone will know what a stable coin is. And so it's good to normalize that concept. But we're going to have a lot of different versions of stable coins, where you're going to have stable coins on public blockchains, like what Circle and Ethereum and Tether is doing. These stables, by the way, still have like clawback functionalities, right? So if they deem that you've done something bad and you've hacked money, right, your money can still be frozen. But banks may even issue stables on more centralized chains, or even like permission networks between banks, right? So maybe they have an idea of, let's build like a payment system between banks and create kind of coalitions. So who knows what's going to happen, but we're definitely going to see this explosion of stables, and maybe we'll have too many stables, right? Like Starbucks is going to have its stables, and Amazon and Shopify, and then very soon you'll be like, this is too much. And so there will be a bit of a consolidation process where not every stable idea will be stable, and we'll kind of like fizzle out, and then we'll see what comes out of it. But what's interesting is now there's a lot of cool new ideas and innovation that's going to happen in the next couple of years. And so I'm all for it, right? This is what I've been waiting for real adoption in real tech and finance, and just trying things, right? Like not every idea is going to work out, but now that we have the regulatory framework that allows for it, then it unlocks really an explosion of creativity on the business side for people to come up with new ways to use these rails. And to be honest, no one really knows what's going to be built, and that's what's exciting, right? It's really a new unlock for the industry to experiment with this new tool in the toolbox.
That was actually one of the big aha moments for me, was with crypto specifically. I looked at my Coinbase account and I had like, I don't know, $1,000 in stables or something like that, and I earned 4% on it. I just got an interest payment, and I looked at that and I was like, this is substantially better than my money just sitting in Bank of America and doing absolutely nothing for me. Like, why can't my cash spending also be generating yield? It's especially at 4%, it's not trivial, and that compounds over time. So yeah, I mean that was honestly something that I thought was super cool, and I'm excited to see the next iterations of financial products that crypto's able to unlock.
Yeah, totally.
So like, So I frankly, I work with Marvin. Yeah, surprise for for everyone listening. Uh, and one thing that's really cool about Maestro is we're getting purview into Bitcoin and into an ecosystem that's really growing and emerging. And the cool part about Bitcoin is there is sort of an intersection of traditional finance and crypto that's able to be built. Because Bitcoin has the brand recognition in the name, TradFi is much more willing to interact with it and operate with it. At the same time, there's also a macroeconomic trend where corporations are starting to put Bitcoin on the balance sheet, and they're going to be able to do a lot more with it. So Maestro is sort of sitting in this great position. So Marvin, I'm wondering if you could talk to us a little bit about what you're seeing with regards to sort of this intersection between DeFi and TradFi, and what you think is now going to start happening since corporations are loading up their balance sheet with Bitcoin and it's getting more real world and institutional adoption.
Yeah, absolutely. I think what's happening right now is absolutely transformative and fascinating. And sometimes, it's hard to, in the moment, realize what's going on. But I really feel like there is a humongous shift that's going to change how we do finance, right? And the building blocks are here, and we're in the first few steps of that race. But the race has started. And maybe just backtrack a little bit.
Mhm.
Why Bitcoin is really the center of attention for a lot of this kind of TradFi and real world adoption um, is about like where is the moat, right, in a new technology. um, and people know Bitcoin is not very fast, it's expensive to transact, it
Mhm.
doesn't have as much functionality, right, as all these other chains like Ethereum. And so, in many ways, the past 5 years, a lot of chain has innovated in terms of technologies. They've, the introduction of smart contracts and ZK proofs and rollups and L2s, all kinds of like intent-based, exchanges. So a lot of innovation in on the technological side. Um, but what people didn't realize is that the moat is not the technology. The moat is the finance fundamentals, and the finance fundamentals is value, right? And so Bitcoin has won the store of value game, right? That's the moat that it's clearly won. That means that people trust Bitcoin to hold value and a way to park assets in the same way that people buy real estate in Manhattan, or some countries with hyperinflation buy gold and hide it under their mattress. People that work for money and want to turn their money into long-term stores of values have been looking for assets that allow that. And that's a question that is ageless. And Bitcoin more recently has entered that asset category, right, of store value. And it's not the only one. And I don't want to tell people that it's the only way to save your wealth, but it's graduated in terms of quality and in terms of perception that it's capable of doing that. And that's the moat, because um, if you want to build a new financial system, you want to build it on this core primitive. And so that's why Maestro is building on Bitcoin. And that's why I think, although Bitcoin has a lot of technological limitations to build in terms of expressiveness and functionality, it's won the mode in store value. And that's what this new financial system is going to be built on. And so what
Mhm.
we're seeing on the ground is that we're seeing this merging of DeFi and TradFi coming from essentially two very different angles, right? DeFi came from Ethereum trying to use these smart contracts and this programmability to build essentially peer-to-peer, permissionless, financial applications. So, peer-to-peer lending, peer-to-peer exchanges. These are blockchain native. These are borderless financial systems that anyone can participate, and it's revolutionary. It's an own way, right? Because it completely bypasses incumbents, it bypasses financial systems, it bypasses country restrictions. It's like the internet, right? The internet is a network of information. blockchain and DeFi is a network of value and commerce. On the TradFi side, right, people are looking now for a way to protect themselves across, devalued currencies, across the world, but including the US. And so they're now at a very fast rate accumulating Bitcoin, right? And that's corporations, like private company like SpaceX, and then you have institutions like banks or like asset managers, and then you also have like nation states, the US included. But they're kind of stuck in terms of what they can do with it, right? So I think the first wave of adoption is around exposure to Bitcoin. And that's what we're seeing. People are buying Bitcoin, getting exposure. But in finance, you want to put your assets to work, right? You want to either be generate some cash flow or earn some yield, or use your assets to take on loan, right? Be able to get credit. And so these are very fundamental needs that traditional finance needs. And so there's this search for that with Bitcoin. And this first iteration is what we saw with Strategy, right? Strategy basically used a bit of financial engineering to accumulate a lot of Bitcoin under on their balance sheets, and then offer through traditional rails, different financial instruments with different risk factors and volatility that allows people to then be able to benefit and use more than just Bitcoin, but Bitcoin-based financial products. But that's the first generation. And I think the second generation is going to be that these yield products and these financial instruments are going to come on chain. And they're going to come on chain, not just for Bitcoin, they're going to come on chains for everything, right? Equity is coming on chains, private equity, right? Companies are not going to just IPO or trade the way it's done currently on the NASDAQ. A lot of that is going to come on chain. So you have this huge shift of bringing equity and value on chain, combine that with people holding more and more Bitcoin. And so now you have this explosion of a new financial kind of software rails that needs to be built, and new financial products. And all of it is not going to be quite DeFi. So DeFi is kind of like one extreme version of it. And probably, what we'll see more in the TradFi is some kind of combination of some DeFi component, some more centralized component, but definitely bringing that equity and those assets on chain, and building novel new products for everyday people, but also like large asset managers, people, exchanges, commodities and real estate and equity. And so all of that is yet to be built, right? This is just us looking into the future, what's coming, but that type of infrastructure and that type of products just doesn't exist yet. And that's really where Maestro comes in, is we're seeing us as like this middle layer for building and powering that critical infrastructure that powers these new financial applications, financial systems, financial products. And then we're talking more and more to corporations and institutions that are very interested in kind of being pioneers on that front and developing, these new pilot programs that would allow them to leapfrog, some of their competitors and offer on-chain asset management solutions, offering on-chain treasury yield products, using the blockchain rails. And they're looking for infrastructure partners like Maestro, right, to really develop and kind of create these new, what I call like Bitcoin enabled rails, to then launch these type of new products. And so this year we've been spending a lot of time, thinking about this very deeply. We see this as like the fastest growing market for us, and kind of having conversation with these institutions to see like, okay, what are some of the first things we could build that really could, bring a lot of that finance on chain and allow them to do what they do already, but in a way that is Bitcoin native.
I've been hearing a lot from CEOs that in TradFi that I frankly wouldn't have expected to hear positive sentiment towards crypto. So, for example, Larry Fink is saying that stocks are going to get tokenized and put on chain. One of the top executives at Apollo, he's saying the same thing. Bill Gurley was referencing it in a recent podcast. So I feel like TradFi is looking at this, and also if you saw the news, Coinbase said very recently that they just filed with I don't know if they do it with the SEC, but filed with the SEC to list stocks on Coinbase. So it's happening. It's super exciting. But why is this such a big shift? Like what is the tangible benefit you think for consumers by putting equities on chain? What's like the actual upgrade here that you see? Like why is this important? Why are people going to shift here?
Yeah, so I mean, there are multiple reasons. The first one is, a new technology brings efficiency, right? So it's either lower costs, right? So you get rid of the middleman, and so you create, just less costly ways to provide the same solution. It can be faster, right? So, the traditional financial system, for example, trading is still using, 9 to 5, 5 days a week time frames. And there's just no reason for it, right? There's no reason why you need to trade between certain hours. It's clearly, this old paradigm when everything was done with, paper, literally pen and paper. And so it's about time that we become more digital native, right? And really kind of catch up to what traditional tech does, right? I mean, I can watch a Netflix movie in 4K in any country at any time, right? It's not it. If we can do that, why can we do finance, 24/7? So that's, I think, the reason. The first reason why these TradFi people would do it is increase in cost, increase in efficiency and fluidity, right? But also for us as a customer, right? It's also an opportunity to hopefully take back our power a little bit and be able to play in the finance game a bit more. The more I learn about how traditional finance works, the more I realize it's an elite club, right, of very privileged entities that are able to benefit no matter what, right? Whether the market goes up or the market goes down, there are certain middlemen and certain entities that are running the pipes, right, that benefit no matter what, and it's a very good business, but it's an unfair advantage and it's not needed, right? If they were solving a clear problem that was useful, maybe it made sense, but we're to a point where we don't need this middleman. And so, I'm not an expert in IPOs and going public, but I heard that there's a lot of inefficiency there, and that's why a lot of companies don't, go public anymore. And there's this like private equity market that's booming, which all of us as retail have an access to private equity, right? And there's huge amount of gains and opportunities to be made on the private equity side. So in a sense, you could say that some aspects of finance is broken or doesn't serve the public and kind of benefits the same people over and over again. So the hope is that this transition to this new system, right, brings more efficiency, but also more fairness and inclusivity, right? Going back to what I thought was exciting about blockchain is kind of bring that power inclusivity back to the people and allow people to invest and participate in finance. And it's not guaranteed. I mean, finance is risky, right? But if you're not even allowed to play, right, then yes, you never lose your money, but you also are not even giving the chance and opportunity to rise up your own standard of living. And there are smart people everywhere that can predict markets and can really understand, can be fantastic investors, and they're not people with suits in skyscrapers in New York, right? Like we've seen that you don't need to be a professional finance person to understand that there are bets that you would want to make that you're not allowed to, that would benefit your life. So that's the goal. I also don't want to be too idealistic, and I know that when you have big shifts and big transformation, there's no guarantee that the new system is better, right? So we are also taking a risk by replacing, the middleman and kind of, going after these monopolies we could be replacing them with new monopolies. And so
Mhm.
the tech giants that we're criticizing today could be the blockchain giants that we criticize tomorrow. Um, and so we have to also take that into account, that we need to fight for change and evolution, but also be careful that we're not just shifting the puck to a new monopoly, and at the end of the day, the consumer and the retailer still loses. And that's a possibility, right? So that's why, keeping a close eye on legislations and trying to participate and have a voice in reminding that this technology promise to make things more inclusive. Let's make sure that it does and doesn't just get regulatory captured by a few people.
So if you're looking out at the next like 3 to 5 years, what do you think the killer app that causes a lot of consumer adoption is?
Yeah, the killer app is this like now this narrative that every cycle people want to know the killer app and the killer app. And well, first, Maestro, we don't build apps, right? So
Mhm.
we go, what we say is like we go where developers go, right? We go where builders go. So we are tool builders, and we follow where the smart builders and entrepreneurs go, and we try to provide that critical infrastructure support and really the tools that they need to be successful. So essentially, Maestro doesn't need to know what's coming next. We get to work with hundreds of companies literally, and kind of see people trying all kinds of all kinds of things. So in that sense, we're very resilient, and we don't need to kind of make bold bets in like a specific vertical. Um, and maybe the question of the killer app is not the right question, right? I think blockchain won when it disappears in the background and it just replaces the rails. And I think the rails is a good analogy, where when you're in the train, you look at the window, you enjoy the view, but you don't see the rails, right? The rails is something that you drive on top of, and you're not focusing on the shape of the rails and how the rails look. You just trust that the rails work,
Mhm.
and they're gonna save you, bring you to where you want to go. Um, and so I think that's the right way to think about the blockchain. Is I've stopped trying to explain people what a blockchain is and what is a decentralized network. Uh, like only unless you want to geek out and really understand the integrity, it should really abstract and disappear in the background. And then from your perspective, the killer app is actually going to look exactly like any app on your phone. It's going
Mhm.
to be the same banking app and Venmo and Airbnb and Uber. It's just under the hood, they've upgraded the system that is more blockchain native. And so, like I was saying earlier, it's more efficient, it's faster, um, and it allows people to have more financial freedom and
Mhm.
more financial ownership of their assets. Um, and so it's more of a fundamental change um, in infrastructure. It's like when we went from landlines to mobile. Um, I mean, in that case, the mobile really changed the interface. But
Mhm.
in this situation, I don't think the interface is going to change. It's going to be the same interface. It's just a better global system.
Mhm. Yeah, I mean with ownership too. I think one of the coolest parts about crypto and blockchain is 50 million Americans have a wallet, which is roughly about, one seventh of the US population. Like what we're going to be able to do with this technology now that more and more people and a higher proportion of Americans have these wallets is going to be incredible. You can now send people stable coins, send people Bitcoin, send people memes, send people equities that are on chain, or if you're a company, distribute equities to your most loyal customers. So yeah, it's a generation of ownership that we're really unlocking. So okay, Marvin, we're almost at time here. I wanna give you some last parting words. Anything you wanna share with our audience here before we leave.
Um, yeah, I mean, so we're well, at my show. I think we have a very privileged position in the industry. We get to really be ground zero, working with the builders, before the apps is live, right? Like really on day one, going from an idea to an MVP to a live product. And so we're seeing a lot of what's happening. And I can tell you that there is this like explosion of ideas and products, innovation, and so the next 6 months, 12 months, you're gonna see really a real transformation of some of the products that you guys can use, end users, that are really gonna transform things. And so if you're excited about that stuff and you're early adopters, right, like try to support these young entrepreneurs in business. They really work, day and night. And we are very grateful to like power and a lot of these great teams, and we're always looking for like new teams to work with and contribute in some ways. So I would say that's probably my favorite part of my job, is kind of working with builders and entrepreneurs, and help make the idea come to life. And yeah, and then we know it's going to keep pushing. It's like, maybe another way to put it is, every generation you have like big transformations, you have big shifts. I studied mechanical engineering. That's cool. I never used that degree. But I was thinking when I was graduating, I'm like, maybe it would have been better to do mechanical engineering during the Industrial Revolution, during the time where people were moving away from horse carts and building trains, building the steam engine, building automation in factories, because that was the heydays where everything had to build, everything needs to be invented, and it was like there were so many exciting problems to be solved that had like impact within your generation. And so that's why I went to software, and I first went to AI, and now blockchain. Is I want to contribute within my generation, and so I need to work within an industry that is going through a transformation, and a revolutionary kind of like upscale, right, during my lifetime. And I don't want to be just optimizing little things that based on innovations of the past. And so I think our generation's big revolution is, obviously AI. Everyone's talking about AI, but definitely also blockchain, and kind of like revamping our financial system. And that only happens once every, I don't know, hundreds, maybe even thousands of years, right? This is not something that is going to happen a lot in the future. So the fact that we live during that transformative time, and we're not just witnessing it, but as a business, we're in the field, we're playing ball, we're participating, and we're helping push it forward, right? And hopefully accelerate that progress and be a catalyst for more growth within that industry, I think is exciting. And so, I'm super happy with what we're doing, and we're having a lot of fun. And keep checking our socials, because we have a lot of big strategic partnerships and announcements to make in the next couple of weeks and months that I think you guys will really like.
Amazing. Well, I couldn't have said it better. So thank you, Marvin, for joining in on our very first inaugural podcast here. That was super fun. I enjoyed the conversation. And until next time.
Same here. Yeah, it was a lot of fun.
Yeah.
Thank you, Davis. Appreciate it. Take
All
care.
right. Keep building. All right. See ya.